What's up, Dream Builder? Are you someone who's interested in creating a life by your design through all things real estate? Well, I can assure you, you are in the right place. Join me, your host, Casanova Brooks. I'm an award-winning real estate agent and investor as we uncover the top tips, strategies, and the mindset of the top real estate entrepreneurs across the world. Stay locked in because we're about to go on a journey that will change your life.
You take things like COVID-19. None of us knew that this would happen. It's vastly different than, let's just say, the 2008 market crash, right? Like you could predict, maybe not the severity of it, but if you were paying attention, you could see the writing on the wall and pivot and shift. And I was, able to do that in my business and had a lot of success even during the market crash. However, with COVID-19, none of us really saw this coming and you can't prepare for it, but you can learn from it. And again, with the intentionality, it's look, man, when that happened, I was actually in LA when Trump shut everything down. I was at it actually spent a few days with one of my mentors in LA. And so I was off the grid, dude. I had no idea what was coming on. I didn't know of really what was taking place until Sunday when I'm in LAX and learning about the shutdown and so forth. First thing I did Monday morning, hit up. First thing is I'm not going to panic. I'm going to go into solution mode. Okay, what can be done? What can I need to do? There's always outside circumstances that we can't control. We need to focus on what we can control. And that's really at the end of the day, that's the difference between a victimhood mindset and somebody that takes full responsibility and becomes a winner. First thing I did Monday morning is had a conversation with my wife and my kids of, hey guys, you're not going to see me much for some time. We've got, when the market crashed in 2007 is when we started to really start to, see the downward trend. I had one business, dude. Right now, today I have 6. I have 100 people that work directly for me through those companies and so forth. Like it's a whole different story now for me than it was then. Right. So I had to sit down with my wife and kids. I'm like, look, I know school's canceled and yeah, we'd love to go do more trips and whatever, but I can't do that right now. Like I got to take care of our businesses. I got to provide for a family. Plus I got to take care of these people that choose to allow me to lead them in these business journeys and make sure that them and their families are taken care of. So it was just like, hey, you guys aren't going to see me for some time. I don't know what this looks like. I'm probably going to be pulling a whole lot of all-nighters 7 days a week. Whatever this looks like, I got to go do what I got to do. Right. And then from there, looking at the situation at hand and then just being, as you mentioned, man, you got to be proactive with it. Okay, what do we need to do to pivot? I said, I know this is a real estate or specific to more of the real estate niche. So first thing that I did was get with our team and all of our staff and be like, okay, hey, like what are the concerns people are going to have? They have this concern of the actual coronavirus itself. Plus they're going to have financial implication concerns. So we got health and we started to put together, okay, how can we minimize those? What can we do? What can we do with our virtual listing presentations, virtual buyer presentations, having virtual showings? What can we do to help educate them to alleviate some of that financial concern that they might have and objections? And we all understood, man, we were like, look, you guys, we might have to double down on our lead generation, double down on our efforts to get the same result. But here's the blessing of this is we know that the vast majority of our competitors are going to bury their fucking head in the sand, right? They're going to let the news get to them. They're going to shut down. They're not going to take action. So there's a lot more business, even though less business is being done, there's more business to be had in that moment. Plus the future stacking of business puts us in a position that our competitors won't be like, when this thing shifts, we'll be able to just catapult and skyrocket and where competitors can't. And we got hit, man. We had 30% of all of our deals overnight fall out. And we have a large team. So that's a lot of volume. But I get it. It's understandable. But we were able to bounce back very quickly from that and still be profitable through the whole thing, not have to lay anybody off and still continue pushing forward and pushing through. And then it's once the dust settles a little bit, all right, then it's reflecting on this. And we actually just had a team meeting a couple of weeks ago on this. Is we're starting our 2021 business planning. We started in September versus usually we start it in end of October, early November. Talking to my agents of, okay, if this comes up, let's just assume, hope for the best, plan for the worst. Let's just assume there are more shutdowns in the future. What can you do to ensure that this doesn't hinder? Because you guys, in order to thrive, and we all want to thrive, but in order to thrive, you got to survive. So maybe instead of having 6 months of reserves in your business account and personal account, maybe you need to have 12 months. Maybe you need to have 2 years, whatever that may be. But history favors he or she that's most prepared. All right. Now that we've been through it, all right, now you can start to prepare for it. And some are going to choose to prepare for it, like myself, and some are not. But that's why I love business, and especially real estate, dude. I've been involved in a lot of ventures outside of real estate, software, apparel, supplements, and the health and fitness industry pretty heavily. And And I can tell you guys, man, I've never seen an industry that's more easier to dominate, man. It's like fishing with dynamite in our industry because there are so many freaking amateurs. There's so many that are uncommitted. I've never seen an industry that has as big of a gap as ours, where it makes it easier just to go out there and absolutely freaking dominate than real estate. There's just not another industry that exists out there that has the same opportunities. That's why I'm so obsessed with the real estate industry.
Man, there's so much there. And the one thing is, I hope somebody that's watching or listening to this, they heard what you said to even start that all off. You gave so much wisdom. So I pray that they rewind this. But first thing that I love that you said is I start off solution based, because just like you said, when we're going through this pandemic, a lot of people lost 10, 15, 20, some even lost 50% of their business through this pandemic, if not all of it. It's just like you're going through a home inspection. It's just like, for whatever reason that a deal could fall apart. We both know that there's so many agents that'll instantly go into attack mode rather than trying to figure out what is the solution. Okay, I see where we're at right now. This deal looks like it might not close. What's the solution? How can we get this thing? And then reverse engineer it, especially if you're a new agent. But even if you're an agent that you're just getting your business off the ground, part-time, trying to go full-time, start off solution-based, because there's nothing better than you already coming to your buyers or your sellers saying, hey, here's where we are right now. Here's 2 to 3 solutions that I have for us. Here's how they can go. Best case scenario, worst case scenario. Let me know which one you like the best. Either way, I think that we're going to be okay. Provide hope, provide optimism. Nobody wants to be hit with the worst news that they could have, which they can't buy or sell a house, and then you have no solution. So that's the first nugget that I took off of that. And I definitely agree with you saying that it's so easy to dominate the real estate industry. And I think it's because when we get out of the corporate world, or never even having a job, if we're just working as a task taker or whatever it is, then all of a sudden we get into real estate and we're a true entrepreneur. We got to handle our own marketing, our own accounting. We got to handle our own customer service, but yet there's no mentorship at all. And because your broker, depending on how many people they have at that brokerage, you could be way down on the bottom on a totem pole and you're not actually producing.
We may be 3 to 6 months out. I know here in Arizona, single family homes have held up really well. Apartments have held up well, and real estate in general has held up well. Even office and retail and hotels, you're just not seeing that distress just yet. But I'm a real big believer that it's coming, and it's definitely coming to Arizona with where we are politically, and the situation with us being the number 1 per capita, with the virus. And it's not a good situation. I think we're going to be following New York's trajectory, and you're certainly seeing everything that you're talking about. You're seeing that in New York already, and in other Midwest cities. So it's happening in slow motion, and it's happening region by region, city by city. So you can certainly find deals. It's certainly a great time to start. If you've never been in real estate, it is a great time to start, but you definitely want to exercise caution. And I would definitely connect with somebody that did it the last time around and knows the cues, knows the clues to look for, knows what to look for in the news, knows what to look for there's a lot of signs. There's a lot of signs that come up and that tell you when it's a good time, when it's time to pounce. You got to look for those signs.
And I love that you brought that up. What are some of the signs that you were looking for when you first got in? And are those signs the same signs of what you're looking for today?
You know what? It's different today. So back then, the signs were so obvious. They'd hit you in the face. They were to the extent of driving to the store and seeing for sale signs on every single corner with big foreclosure banners. They were getting emails from the auction companies that they were renting out a hotel ballroom to sell 250 assets all in an hour. Those are all signs. Those are all signs of distress. So what you're looking for is signs of distress. And they show themselves in different ways depending on where we are in the cycle. We're clearly at the beginning of a down cycle right now, but those signs have not shown in real estate. So they've shown in oil, and it was obvious in oil. You saw what happened. You just watched the price. But there were a lot of signs before the price dropped with oil. Same thing with housing, right? So you're going to start seeing notice of foreclosure. How many notices of foreclosure are being sent out compared to the prior month, compared to the prior year? And you watch that trend and you watch where it goes. How many are actually getting foreclosed? Like right now, there's been government intervention that aren't allowing a lot of assets to get foreclosed, but are notices going out? What's happening with the distressed auctions? What's happening with the rental market? Is it softening up? And probably the most important, something that I'm looking for always regardless, is what's happening with population trends. What's happening with population trends? I was talking to you before this podcast. You said you're moving, right, from the Midwest, and you're looking at Texas and Arizona, right? You're not the only one. You're not the only one. And someone sitting in California that's sitting in San Leandro or Van Nuys or wherever, pick a city, they're tired, man. They're tired. They're tired of the bullshit. They're tired of the taxes. They're tired of the traffic. They're tired of the infrastructure. They're tired of the schools. They're tired of the earthquake insurance. Maybe they like the weather, but that's not the only place that has good weather. So they're coming to Arizona. They're coming to Arizona. They're coming to Florida. They're coming to Texas. The Sun Belt states. The Sun Belt states, the same states that everyone says has been talking about. So you watch that population and you say, are those trends going to change? Because at the end of the day, real estate is always going to be driven by people. Don't forget what real estate is. It's not a stock. It's not a stock that one day it's hot on a news report and the next day it's not. You know, one day people love Tesla and the next day they hate Tesla. Right. One day they love Apple, the next day Steve Jobs is gone and they haven't innovated for 10 years. You know what I mean? With real estate, it's a roof over people's head. And that's driven by people and how many people live in a city compared with how many homes are being built, supply and demand. I have never lost money on a real estate deal.
Wow.
All my time doing real estate. Yeah, which is, I have some friends that have been in this game longer than me, that have been in this game 20, 30 years that keep saying, oh, just wait. It's coming. You'll get yours. So you don't learn until you lose. I've just been lucky enough, I guess. I don't know if it's luck.
Do you think it's just because you know how to really dissect your numbers on the front end, or have you just had, like, what do you attribute that to?
You know what? I learned something really early in my career, maybe even in college, in accounting 101. And it's a thought of that every asset has an intrinsic bottom line value, right? It's called intrinsic value. And in real estate, my theory is that every house or apartment or hotel or whatever you want to call it that you buy is going to have a specific value in any market. And so you can say the worst case scenario market, pandemic, World War III, all happening at the same time, the asset has to have some kind of value. And in certain markets, in certain places, you can easily make an argument that the intrinsic value is zero. Like in Detroit, where population went from 3 million to 650,000, you can easily make an argument that a house built in 1940 in a bad neighborhood, the intrinsic value is zero, right? Because it's depreciated away to nothing. But what I'm looking at is what is the worst case scenario value? And it's a combination of, rebuild cost. What does it cost to build this house? What's the rental cost? And I'm never, ever under any market buying something that's going to be crazy valued over that intrinsic cost. And I use that theory all the time, even today on complex commercial assets. I'll look at a 100-unit apartment complex in Phoenix is one of the hottest markets in the United States, very difficult to buy. And I'm seeing people buying 1982 property, which is nice, which is still decent. You can still have some curb appeal, but they're buying it for maybe 50% more than it costs to buy land in an A neighborhood and build a brand new apartment. So you're clearly off your value, right? And when the economy bursts, depending on where you are in the cycle, that's going to be the first asset that's going to take that hit, right? Because the top of the line stuff's going to have to lower the price. What happens to the mid tier? But if you bought it, so if it costs $150 a square foot to build an apartment complex in a state like Arizona, and you're buying a 1982 product for $200 a square foot, and then having to put another $50 a square foot into repositioning it, you're into it for $250 a square foot. And your philosophy is that you're going to raise your rents 200, 300, whatever it is, you're going to raise your rents to make it look like to drive demand to your units. And You're going to say, but the A-class new stuff is renting for $1,600. I'm renting for $1,400 and I'm similar. What's your advantage if it costs you the same or more as the guy that built that? A-plus property. What is your advantage? You're renting for $200 less, and you had to do all the work to reposition it. And then you have all the risk that if something happens in the cycle, it's going to go down to below rebuild costs. We already saw that. So all I see in a deal like that is risk. I don't see the upside. The upside is everything has to go perfect in the economy, and everything has to go perfect from here on out. But we know that doesn't happen. It did happen just recently for the last, 8 years straight, 6 years straight, or whatever you want to say, the longest up cycle that we've ever had. But the writing was on the wall that had to end. So here we are, people are stuck with these assets, and the prices haven't changed yet. There's a lot of assets coming on the market, and brokers are going to tell you they're pricing stuff based on the peak of the last cycle. Here we are entering a new cycle. I don't think anybody argues that anymore, that we're at the beginning of a new long-term down cycle. Is that cycle going to last 1 year, 2 years, 5 years? Nobody knows. Is it going to be V-shaped or U-shaped? It's obvious it is U-shaped at this point, right? It's obvious that it's going to take a little bit longer, right? And then you have all this political risk on top of it. The 1% right now are scrambling. The 1% right now are having meetings, hiring accountants, lawyers. They're having meetings getting ready for the next 5 to 10 years of taxes. A Republican or Democrat, I hate to break it, but Trump's not getting reelected. It's the writing's on the wall right now.
It definitely seems like it, especially I think I've seen like a month ago where he was then starting to say that there's been scams, and you could see that in their mind, they're already conceding defeat. And so that'll be very interesting to see if he doesn't get reelected, then what real estate looks like from there. Do you think that it changes?
It does change. And I've been saying this, probably you can go back to podcasts from 2 years ago. And I've been saying that I didn't know what was going to cause the down cycle, but I knew that the biggest risk was going to be government policy and tax changes, and how that the influence to real estate is enormous. People don't see it necessarily, but it's a lot further than just a change in the capital gains tax rate or the change in the top rate. There's so much more than that. And it's coming. We're not going to continue on this trajectory. I don't see a scenario. You talk to hardcore right wing, and they say there's no way that Trump's going to lose. But the way I see it, I'm straight down the middle. I'm not taking a position one way or the other. But I don't see a scenario. I follow politics state by state, and he's not winning. Short of Biden getting the virus or completely collapsing in the debates, which all could happen. It all could happen. Right now, if he just stays in his basement, keeps his mouth shut, lets his hair plugs dry, he's got it.
I was going to say, so for somebody out there that's now looking at this and they say, okay, after the election term, it looks like things are going to change. And we know that the real reason that most people don't get into real estate is because they're always waiting for the right time. So if someone hears that right now and they say, oh, maybe I'll wait till after the election. Do you think that people should be waiting a certain time frame before they start to jump in? Or do you feel like right now is still as great of time ever to buy real estate?
That's a very general question. And it's, I hate to say market by market, but it really is. What I will say is there's at any given point in time, there's always a good deal out there. It's just a matter of how hard you want to work for it, and how hard you want to look for it. Another thing I will say is the stuff I'm saying about the tax changes and the regime changes don't have as much to do with single family, because a lot of the tax tricks and tax benefits don't particularly apply when you're buying single family. They apply to commercial assets, to a large multifamily or a hotel or a retail or something like that. So it's not going to, the tax change wouldn't take as big of a bite to the mom and pop single family home investor. I would get back to basics, right? In the Midwest, so that the trend line for a home in Cleveland, right, is 50, 60,000 that rents for 900, and those numbers work. So if you can get a market expertise in Cleveland or in Omaha or in wherever your city is where the numbers work, you've protected your downside, right? So you may not have appreciation. So that house you bought for 50,000 in Cleveland may not be worth 100 in 5 years, right? It may or it may not, but you don't really care at that point. When I was buying in Arizona at those prices, I didn't care about appreciation. I didn't buy for appreciation. I let cash flow speak. I wanted the cash flow, and I got the cash flow. And if you can get the cash flow, you're safe. You're safe because rents aren't going to move that much. If you bought for 50 or 60, and you can make arguments that's a good investment, bad investment, whatever. I'm just saying numbers wise. If you bought for 50 and your rent is 900 today, what's the worst that can happen to you? The worst is you bought in the wrong metro, you bought in a population loss metro, and that house goes down to intrinsic value 0, i.e. Detroit, right? Hopefully you didn't do that. Hopefully you bought in a Midwest city. Maybe you bought in Indianapolis that's actually still growing. Maybe you bought in Columbus. There's cities out there that you can still get good deals with population growth, right? Your worst case scenario in those purchases is that your rent went from 900 to 850, or from 900 to 800. 10% on paper, that's a big hit, but that doesn't change your dynamic. That doesn't change much. And you can manage your way out of that. So if the Wall Street Journal says Cleveland rents went down 7% last quarter, and you were at 900 and your tenant left, it doesn't mean you can't get 900 again. Right. It just means that you got to work a little bit harder. You got to post a couple extra places. You got to do a couple extra showings. You got to pick up your phone. You got to have better customer service. You'll get your 900 again. It's not a stock. It's not a stock where when the ticker says it went down 10%, it went down 10%. That's not housing. That's not housing. You can outmanage and outbrain. And that's why I love real estate. That's one of the reasons I love real estate the most, because it's a function of your brain. Your returns are as good as you are. Thanks. No one's throwing a dart at real estate and making all this money. It's how good of a manager, how good of an asset manager are you? How good of a researcher are you? How good of an accountant are you? You got to have a lot of hats. And if you're good at all those hats, you'll make money. You'll make money in any market.
What are your thoughts on other agents that are getting in? Because some of these people right now, same thing. Maybe they're half into their pandemic, but they've gotten, or not pandemic, but because of the pandemic, they're half into their job still. But because of the pandemic, this is allowing them to work from home, which now they're feeling like, okay, this is that time that I can really get learning on my real estate. I can jump all in. I can make a change because I don't have to be in this office every day. Do you feel like somebody that's really looking to hit the gates running, right? Hit the ground running. Do you think that they could do it part-time, or do you think that they have to jump in and burn the boats?
I think that based on my experience, you definitely have to jump in full-time, 100%. And especially with this time where we are with this pandemic, a lot of agents are afraid. And when this whole lockdown started back in March, a lot of them were like, oh, I'm taking a step back from my business. I'm going to work on my presentations. I'm going to work on my CRM, my database, my mailing list. Whereas my team, I'm like, no, we're pushing full forward. And right away, immediately, we were delivering groceries to any of our clients who were immunocompromised. I do have quite a bit of seniors. So checking in with them, checking in with their families. I have seniors who are here, but their family live hours away. Mm-hmm. So for some of them, I have one lady who has leukemia. So we were delivering the groceries to her, the hand sanitizer. We were offering to deliver to anyone who needed help because we were deemed an essential business, whereas a lot of businesses closed down. And for my first-time buyers, we saw a significant drop in the list price and sale price where I live. I'm talking $50,000 to $100,000 in 1 month dropped because no one knew what was going on. Everyone was scared. So all my first-time buyers, I was like, "Hey, Jeff, you still got your job? Okay, you need to buy now because otherwise you won't be able to buy when this market picks up." And it's an interesting time being in real estate. And I tell this to the agents that interview with me because they're like, oh, I got into this business like at the worst time ever. Now there's got to be a pandemic. How do I even start my business? And I tell them this is the best time to get into this industry because now the real players are going to shine. Right. A lot of people are sitting back. It's easy to sell real estate in a good market. In a good market, it's easy. Sell the house, buy the house, anyone can do it. But it's true testament to your skills if you can do this in a bad market. And I love the adrenaline. I love a challenge. And like I said, we live in a housing crisis where we've been waiting. My generation, we've been praying and hoping for the bubble to pop for several years. So the idea that there may be some opportunity is really exciting. I have all of my buyers locked and loaded and ready to pull the trigger when the time comes. So for anyone who is starting out, Go in full time. Don't be afraid of this pandemic. In every recession, there are winners and losers, right? And
Facts.
this industry allows us to be winners. Like there's a huge opportunity. There's a major like shift in wealth happening. So I wanted to excite you. I want you to feel motivated. I want you to feel powerful because now you can make that relationship with someone. Now is the time where you can really make a meaningful connection because a lot of other agents are not doing it.
I think the biggest struggle that agents have is generally a lead generation problem and sometimes a lead conversion problem. Yet I'm also a big believer that if you get in front of enough leads, you'll get better at conversion. So a lot of the time it's just figuring out how can I get in front of more people. And it's funny, like I say get in front of, and we're in COVID, like it's a little bit different right now. And I've had many conversations with people who are, having that kind of challenge. And I think it's a matter of focusing on growing your database person by person. So whether you're attending, I've been on Zoom networking events that have been awesome. I recently got together a group of people in a park and did a socially distanced networking event. People are still doing open houses. There's a lot of ways to meet people. And I think just like a foundational thing that was instilled in me from some really good training I got when I was new was just to grow my database bigger and bigger, add them faithfully to whatever you're using. It could be Google Contacts, a spreadsheet, or a nice CRM. It doesn't really matter. But the more people that we can add to that list and stay in touch with, it will turn into business. And I think that when you don't have a lot of momentum, it's hard to get that going. And that's where I see people getting stuck. And the thing that I found the most helpful is just to say, find something that you enjoy doing. For me, it's been community service. I'm on some boards and committees. I look for stuff that's fun, that involves other people, and then I just go do it. And then I make sure they get into my database. So if you're really stuck, I would say, what could you do right now, virtual or in real life, that would be fun and interactive, and just find a little bit of momentum and then build on it.
Yeah, I think that's crucial. And I'm glad that you said that. For a lot of people, they think, oh, all I can do is post or talk about real estate. But if you go find those people that are on boards, or you find hobbies and common interests, that opens up the conversation for you to learn about other people, and everybody wants to talk about themselves. And as long as you're more interested than interesting, right? So you're listening more than you're talking, eventually it will open up for you to be able to say what you do. And you say, you know what? I love real estate. Don't even have to say, I'm a realtor. Just say, I love real estate. Everyone loves real estate in some form. HGTV, investing, it doesn't matter. Someone loves real estate in some form. And then they're like, oh, you do real estate. That's where it opens up the conversation. So I'm glad that you said that.
Yeah, if I could just add one
Yeah.
thing, I think part of what's a springboard and what you said of making it happen for people and listening more than you take is like being an organizer has worked really well for me. So whether it's a simple Facebook post, like there was something I put out at the beginning of the pandemic just saying, if any of my friends are business owners and would just like to brainstorm with somebody that has a lot of business experience and you just need some solutions and ideas of what you're going to do right now, reach out to me. So that's just an example of what I'm trying to get at. But I think if you have a skill, and maybe if you're newer in the business and don't have a lot of leads, you might have other areas of expertise, but just being a connector, somebody who puts things together for other people, especially with the pandemic, a lot of people feel stuck and like there's nothing to do and nowhere to go and no end in sight. They're not always creating solutions. So when we come to them and say, hey, like I'm doing this networking event for 10 people at a park or whatever, it's like putting something out for people. Like the gratitude that I've gotten for the couple things that I have put together has been very significant. We also just did a client event at a farm and we did this whole thing. It was socially distanced. We only allowed a certain number of people per hour to come. So it was very safe. And people got there and they were like, oh my gosh, thank you for doing this. It's the first time I've come to anything since March. So just find something that you can do to give, serve, or bring joy to other people.
There's a lot of people right now, especially because we've been going through this pandemic, that this is their opportunity to merge their way out, if that makes sense. And so they're looking at it and they're saying, you know what, I think that's exactly me. I understand that in this corporate world, I've had a lot of ideas. I keep getting shut down. It feels like everybody can tell me no, but nobody can tell me yes. Maybe I should go along that path. So maybe someone hears this and they say, okay, that's really cool. And maybe they can go down that journey as well. My question to you is, as you've built your team, which if I understand correctly, it's 100% remote.
Mm-hmm.
Are they
Yep.
all here in the US, or now have they all here in the US?
All in the US.
What's been your biggest challenge from a business owner perspective of growing a remote team?
So the biggest challenge is figuring out what to hold people accountable to. And on top of that, instilling a really strong culture. Those are the two biggest challenges that you face with a remote team. The accountability piece is tough. When I was at Ernst & Young, I was quote unquote managing two people. And when I think back to it, it was really, do you show up on time at 9 a.m.? Do you leave at 6? Are you booking 45 hours a week? And is the quality of your work decent? If yes, cool, you get a 3 on your performance review. And I know that that's oversimplifying performance reviews, but there's a lot of that in the in-office environment. There's a lot of the, do you show up at 9 or at 8 or whatever that start time is? And for me, it never made sense, because if I produced the work, it didn't make sense to show. I think that you should show up on time. And I showed up to this podcast a minute late, so I'm eating my words right now. But anyway, you should show up on time, but how important is that to your overall performance? And you should spend whatever time needed to drive the results, but is that 9 to 5 or is that 9 to 10 a.m.? What are the results that you're actually being held accountable to? So the biggest thing for me was trying to figure that piece out. I knew that running a virtual firm, I did not want to track people's time. I didn't want to worry about what time they started or what time they left, or if they decided to take a break for 2 hours in the middle of the day to go to a barbecue, which our employees have done, and I've encouraged it. It doesn't matter to me. That makes it's your time. You do with it what you want. We call it work-life integration, not balance. There's no Saturdays and Sundays. You work whenever you want to. It doesn't matter. The difference is that I'm going to hold you accountable to a set of results that you can reasonably achieve in a 40 to 45 hour work week. And those results are what I hold you accountable to. You either hit them or you don't. And that's the objective piece of accountability. There's also the subjective piece of how else did you add value to the firm and help the firm achieve key objectives. So that was the hardest piece to figure out. And it's a weird thing, because you have to try to figure out, are you going to be hardcore about this? If I'm holding you accountable to $15,000 a month in revenue and you hit $14,999, and then you come to me for a raise and a promotion, what do I do? Do I tell you missed it by $1? Or do I tell you that was close enough? So you got to figure out like how hardcore you want to be about results, and that's going to influence the results you hold people accountable to. But once you have that, you add immense clarity to your staff and to your organization. And it's always something that can be improved and worked on too. So that was my big thing for 2020. You know, I've been working at this for 5 years. But my big thing for 2020 was to finally solidify and add that rock solid clarity to everybody. Because even when you get employees coming on board too, they're coming from environments where if they show up at 9 and they leave at 5, they get a 3 on their performance review.
Right.
And now all of a sudden you're telling them you're going to work 40 to 45 hours a week, but you're going to work and you're going to drive results. And here's what results look like. And are you willing to accept this challenge? Because it's going to be weird. and so that's the toughest thing, is just holding people accountable to results and making sure it's the right results for the right things, the right motivations. You're motivating the right behavior.
And then the second piece of it, which takes on a whole life of itself, but the culture thing, whether you're corporate or whether you're not, I think a lot of people struggle with culture, just like you said, because they're coming from a lot of different environments. Like, how has that been for you is everybody jumping on one team meeting? Have you just delegated to like brand managers and they handle their departments? What does that look like for your company?
A little bit of both. So what I like to say is we have to work on culture very intentionally in a virtual environment. It's not something that, culture, that's not totally true for virtual. It's true for office too. If you don't work on your culture, the culture is going to be built regardless, right? Like, people are going to talk, things are going to happen. The culture is the result of every little decision that has been made up until that point for your firm's history. And that's how you define that. So the question is, can I intentionally influence those little decisions along the way? And I think that in a virtual environment, it's just absolutely critical to spend the time influencing that. Otherwise, you're going to have people in silos. They're going to be very isolated because a virtual environment is isolating by nature. And they're not going to feel like they are part of the culture that you're building. How do you intentionally build culture? You've got to create meeting rhythms, something that people can always count on. So we always have a Friday team meeting, same time. It starts at the same time, it ends at the same time every single week. I have a manager meeting with my managers every single week. Same thing. We have a sales meeting, a marketing meeting with various people on the team. All of my managers have weekly meetings with their teams. So doesn't seem like it's that different from an office environment. But the one thing here is that we never cancel those meetings. It's always going to be there, except for like holidays, obviously. And we expect everybody to show up and we expect everybody to participate. So it's just creating a rhythm. The different team events that we have, the ways that we lay out our Slack channels, just all very intentional. We have an online virtual office called Sococo that actually replicates an office, and we require everybody to be in there. We require everybody to keep their calendars 100% up to date. If you're out of office, you got to have big blocks in your calendar so that everybody knows that you're out. And all we're doing is just trying to be very transparent as to what we're all doing on an ongoing basis so that we can collaborate and communicate very easily with each other. And that's where that intentionality comes from.
There's a lot of people out there that, especially us going through a pandemic, us going through what we're seeing as far as George Floyd, Black Lives Matter, all of these different things, Jacob Blake, and people are feeling like, man, there's no hope, but there's always hope and your future is always brighter than ever. So I want to fast forward to what was the things that you started to do? Was it just a change of luck, or was there specific things and tactics that you started to put into place of how you started to actually drive business? What did that look like?
I don't want to say that it was a change of luck because I'm a big believer in energy. I shifted the energy coming to me because literally that next week I ended up getting an offer on it, and I ended up successfully closing it. The agent bullied me through the whole way, but luckily made it to the closing table. But there was a shift in energy in the forces that were working for me at that point, because it wasn't so much me having this novelty idea of real estate in my head and how it was supposed to be. It was me experiencing how something works from start to finish. And that was the only thing that I could relate it to. I can only relate a real estate transaction to being in that property weekend after weekend, month after month, and it taking that long. So then I was able to frame my mind differently and my expectations changed. And so I said to myself, okay, so I know that's what it's going to take. So I need to get like 10 of these now, all going at the same time. Right. So that way, like I was forming all these different timelines in my head on that, what I see a lot of people do. And I'm glad that I didn't do this because it would have totally been the wrong way. People start looking for the easier route or the shortcut. Me, I didn't do that. I was like, okay, this is how it is. Now I'm going to stack these on top of each other and make it work. Luckily, I can see now it doesn't have to be like that, but I didn't go looking for a shortcut. So for me, it wasn't necessarily a shift in tactic or me doing anything differently. I just did it way more. Like I was on that phone every day. That's what made me believe in cold calling, because that's how I got the listing. I learned a lesson in doing what I say that I'm going to do because of that one shot. Okay, now I'm doing that for everybody. It was just more so really being on it and being on it a lot more than I was.
Man, I love it. And experience is always going to be your best teacher. That's what I'm hearing. And so you experienced it. So it's like your belief in whatever. Once you've experienced it, no one can talk you out of it. But it was, you had to go through the trenches to know that, hey, if I just go that extra mile, because for a lot of people that don't go through the trenches, they don't go all the way through the trenches. And maybe you're only making 5 calls a day, right? Cold calls. And then you just quit. So then you're thinking cold calling doesn't work. But for that person that goes 15, 20, 25 cold calls a day, and then on the 25th one, they get that listing similar like what now you can't tell them, but it's because they went through the trenches.
Yep.
They understand that I got to go a little bit more, but my next yes is coming. First, I want to say thank you for allowing me to walk with you on this real estate journey. If you've gotten anything out of this episode, do me a favor and head on over to iTunes if you have access and leave me a review. My whole goal is to make sure that I'm serving you all the right way. You're my tribe. You're who I care about. You're why I do this. So if you want to give me any type of thanks, or if you want to let me know whatever your thoughts or your feelings are from this episode or any other episode that you've listened to, leave me a rating or review. And also, if you're looking for more tips, strategies, and even resources when it comes to leveling up your real estate game, head on over to DreamNationAcademy.com. We have a really cool real estate section there, and it's something that I wish that I would have had when I first got started in real estate. So that's DreamNationAcademy.com. Don't wait. I'll see you on the other side.